John and Badrish, you guys kind of know the drill, but Jonatas, you're just joining us. So we have a few slides here that kind of set context. And so we'll go through that and then we can go from there. We kind of talked about this in the outlook, but obviously chemicals has struggled in the last few years and struggled for those of us who kind of collectively work in the chemicals industry is probably too mild a word. And we kind of see some of that here in the spending patterns, right? We saw a little bit of an, I guess, growth coming out of COVID in terms of capital spending in chemicals, but the last few years have been super challenging. As I discussed in my outlook this morning, I think the next couple of years, at least that's from our point of view, we still see the industry kind of struggling here over the next couple of years. This would be an interesting thing actually to get the panelists to talk about, right? But where do we see growth opportunities and where do we see continued challenges here is what we're trying to show here. Some of the segments that we look at. And you'll see that a couple of them, the y-axis is the growth outlook. And that's still negative for a lot of industry segments. Plastic resins, for example, we still see a difficult environment. What was interesting is specialties we thought would have some limited exposure to this, but specialties is still a pretty broad bucket, and collectively all of that is still challenged. We see some growth opportunities in organics and some other bulk markets, but generally speaking, difficult environment here for the next year and so on. The challenge is that there's just a lot of capacity, and even the Chinese, where a lot of this overcapacity resides, are taking a look at this and saying that, okay, maybe we have a lot of extra capacity here, and maybe we should think about all of this capacity in more economic terms rather than just seeking growth for the sake of growth. So they have this new anti-involution policy that essentially is trying to look at relatively disadvantaged capacity or capacity that is further up on the cost curve and saying that maybe we should shut this down. This is a positive step. Conceptually, it should make a lot of sense, but it still is not sufficient, right? We still see, coupled with new capacity that is coming in, the closures are just not enough. So it continues to be an issue. By the way, we are seeing similar trends around capacity rationalization in Korea, for example. We are seeing similar initiatives in other parts of the world. And then, of course, just on a pure economic basis, we are seeing a lot of capacity being shut down in Europe, right? That's going off of the... We've been doing a ton of work in plastics recycling. We acquired Chemical Market Resources 7 or 8 years ago, and for the first few years, we did nothing except recycling projects. It was only after that we started doing work in some of the other traditional, more polymers plastics projects. We just finished a massive study actually on plastics recycling. My colleagues who worked on that study are probably tired of the study, but they did an incredible job, like going country by country, looking at what's happening with plastics recycling. And you'll see here, it's kind of color coded here, but essentially where we see the best opportunities are Europe and Asia Pacific, and for very different reasons, right? Europe is driven to a large extent by policy that is supportive of recycling investments, while Asia Pacific is being driven more by the fact that they are set up from an infrastructure point of view to handle plastics recycling better through lower cost of labor, much deeper reuse, recycling value chains and things like that. Corporate commitments and consumer brands that were committed to plastics recycling are also kind of stepping back a little bit. They're recognizing the challenges associated with actually meeting some of their commitments around the use of recycled materials, and so we are seeing a lot of them step back. So we are a lot of these players are like revising their timelines, right? So what they were hoping to achieve by, let's say, 2030 is now getting pushed out to 2035. So in that sense, there continues to be some support for this, but the timelines are being relaxed. Pricing hasn't helped. Recycled polymers are all have all collapsed in terms of pricing. In most cases, virgin plastic pricing, virgin polymer pricing is cheaper than recycled polymer pricing, and so therefore it makes it difficult to. We do a ton of work in this, ton of research. CMR is super recognized for its library of multi-client studies. So we publish over 55 multi-client studies that we maintain quite regularly on a broad range of topics: polyolefins, style layer resins, compounding, polymer catalysts. So it's a pretty broad range. With that, let's kind of get into the discussion and talk a little bit about some of these trends. Jonatas, maybe we'll start with you. Tell us a little bit about Baystar. A lot of people in the chemical space here know, but we also have some colleagues from other markets. So maybe a bit of an introduction would be helpful.
Happy to. First of all, Uday, thanks for the invitation. Thanks all for listening. Quick words about Baystar and quick words a little bit about myself, so we put context on that. Baystar is a joint venture between TotalEnergies and Borealis. I think Total, everybody knows, we don't need to announce too much. Borealis is one of the key players in the plastics, petrochemicals business, mainly in Europe, with a major joint venture. There is another joint venture with ADNOC that is called Badrish. So these two the Borealis and the Badrish joint venture is very well known. The two giants decide to join forces together and build Baystar, that is basically responsible in North America. From an asset point of view, we have a state-of-the-art cracker in Port Arthur and three polyethylene units very close to Houston, in Pasadena. The exciting part of that is, as part of the joint venture, Borealis licensed Baystar technology to North America. So it's a first of its kind technology brought to North America. We are very excited to bring this new case to North America in terms of technology. Yeah? Maybe a quick comment about myself. Where do I fit in this concept? So I joined Baystar in July 2024. You see the version there without glasses. I'm still the same person. And I come from the Borealis side of the family, if you'd like to put this way. So happy to, we have articulated that. I have been living in Abu Dhabi. I lived also in Singapore, and very happy to be here now to bring technology of Baystar, but also other solutions that Baystar is able to offer to this market.
Thank you, Jonatas. Badrish, tell us a little bit about maybe SK at a high level, but maybe also your particular portfolio of specialty polymers, copolymers, ethylene copolymers that you handle.
Thank you, Uday, for having this panel. Thanks to all for staying back to the last one. Real quick, my name is Badrish Krishnan. I manage the specialty polymers business for a company called SK Centric. The specialty polymers business is a team of about 600 people globally, with manufacturing sites here in Texas, in Europe, and in Asia. And this team spans commercial, strategy, technical, manufacturing, operations, etc. The specialty polymers business rolls up into SK Centric, which previously was called SK Global Chemical. We went with a rebranding to keep in touch with the times around sustainability. SK Centric is about a $15 billion annual revenue company, which rolls up into the SK Group, which many of you may be familiar with. It's a multinational conglomerate headquartered in Korea, with businesses ranging from energy, oil and gas, chemicals, to telecommunications, semiconductor chips, transportation, logistics, EV batteries, etc.
Thank you, Badrish. Maybe can you comment a little bit about, like, you have a unique perspective, right, in the sense that there is this footprint in or exposure to Asian markets. Like, how are you seeing, I guess, what's the view from South Korea on the chemical industry more broadly?
If you kind of break it up into a few different categories, you have broadly in the chemicals market, you can say you have basic chemicals, benzene and paraxylene, for example, and then you have basic feedstock, ethylene, propylene, that you'd be very familiar with, and so on. And then you have base polymers, polyethylene, polypropylene, PETs, PVC, and so on, which we call base plastics. And then you have specialty polymers that have these base plastics and a functional group that provide additional functionality over and above base plastics. So if you take this across the first two, at least, the feedstock as well as the basic chemicals, as Uday was mentioning, it's been a challenging environment the last few years. There's a lot of overcapacity, and fixed costs are fixed costs. They're going nowhere. So you're seeing asset rationalizations primarily across Europe, not as much in the United States, and surprisingly enough, even in Asia, as Uday was mentioning, you have China, which has got a lot of capacity coming online, but those pounds are not seeing a way into the market. So there is a rethinking, especially what's happening with somewhat of a slower economy these days. So I would say across these kind of base chemicals, base feedstock, there is margin compression and asset rationalization ongoing. On the specialty side, though, the story is a little different. And again, specialty is a wide range. You have different kinds, but that is more resilient. These are smaller plants. These are higher price point products, commanding higher gross margins, so they are able to withstand somewhat of a downturn. And you might see a little bit of a margin compression, but still it is good pieces of business that are resilient. They're not as elastic as your base chemicals, so they're able to withstand these headwinds and continue forward.
John, tell us a little bit about Locus. It's not exactly the brand name that Baystar and SK are, but tell us a little bit, and maybe tell us a little bit about the successful fundraise that you've just completed.
Be happy to. Sure. First of all, again, thanks for having me. I appreciate being here, and I'm excited to be up here with the two of you because I'm on the opposite end of the scale in terms of both size and in terms of specialty. We're real special, very unique kinds of molecules. And after 32 years with large specialty chemical companies, this has been a real shift for me. So I'm John Uhran. Locus Fermentation Solutions has two technology platforms. We have a biological platform where we grow products to use in ag to increase productivity. And then we have a biosurfactant platform where we manufacture surfactants by fermentation, which are used to, again, improve productivity in agriculture, in mining, in oil and gas, and in industrial. And again, for us, all the negative news that we just talked about really doesn't, in some ways, has a very positive impact on us. So that's the benefit, I suppose, of being on the opposite end of the scale in terms of specialty.
And maybe tell us a little bit about what markets are you trying to serve or are most relevant for you?
Absolutely. First of all, you asked me about the fundraise. So we did successfully raise $40 million last year. So that's a demonstration to me. We're privately held by private equity. That's their confidence in us, basically. So we were really excited about that. And it sounds like a small sum to most of you, but that's enough for us. It's really to keep us going. So again, our markets are agriculture. So both our biologicals and our surfactant technology get used in agriculture, oil and gas. So very much operator and service company driven business. Mining, where we're actually getting more of the mineral and more pure mineral out of the ore. And then what we loosely call industrial markets. So really difficult cleaning markets, specialty paints and coatings markets. It's broad, but we're actually quite focused. So we have a very high bar when we take on new opportunities in that space. So it's got to be big enough to matter.
Jonatas, I'll come to Baystar and your asset base here, but you have exposure or visibility into a couple of key regions, right? Into Europe, of course, but then also the Middle East because of Borealis. So maybe can you give us a little bit of an overview of what the perspective in the chemical industry, what the perspective of the chemical industry is in Europe, where there's been significant activity, and then of course also the Middle East?
I can try, perhaps. No, I think we are all experiencing the same effect. I think perhaps I'm a bit more optimistic than many. If you look into solutions that we have seen in chemicals industry from a more broader point of view, they continue growing. They continue growing above GDP in many of these regions, especially in regions that are underdeveloped. You will see India, Southeast Asia, again, I lived in Singapore for a while. India, Southeast Asia, polymers, chemicals in general, they are growing above GDP. Yeah, so from a demand point of view and from what the market is expecting to see, you can even argue it is still a positive story. And I'll perhaps touch quickly on sustainability in the end. What we do see is obviously a capacity build-up that is unprecedented, and you could argue how much of that is purely economical, how much of that has other connotations from a geopolitical point of view. With that in mind, regions that are in less advantaged conditions, typically, unfortunately, Korea, Japan, as well as in Europe, are in a level of pressure that is really unprecedented. Maybe I talk 30 seconds about Europe first. Announcements are all around the place. You see plants being closed. We see as well assets being valuated almost at zero, but it would be unprecedented, right? So that industry consolidation is already happening. It's not that it's going to happen. There will be capacity being removed out of the market. Again, it was in Europe until 2024. The industry know which assets will prevail, which assets will not prevail within this time frame, or there's a big likelihood, let me put differently, right? In Asia, the story, as I mentioned, very much around growth. There's still quite some growth, and if you think about from a Middle East perspective and proximity of markets, you have growth in India that is surpassing again GDP, and GDP growth in India has been very, very healthy. So from a Middle East player point of view, you will see one of the beauties perhaps of being in the Middle East, it is the capability of swing from region to region, depending on how the markets actually evolve. What is partially true for North America, we all know 50% perhaps of the total capacity of polyethylene is being exported out of North America. But I can tell you the efficiency of creating this exports out of Middle East today, it surpasses the efficiency in North America, specifically because of logistic constraints. And these logistics have been built for the last 10, 15 years. US is kind of catching up with the capacity that has been built, right? I'm more optimistic than many in terms of demand and how this industry will rebalance itself. But we will see a couple of years of turmoil.
So when you say there are logistical constraints, is it on the product side, product exports, or is it more on the feedstock side?
And again, I'm here for 1.5 years, so take my comments with a pinch of salt, right? What I can observe is the Middle East players have built their infrastructure with export in mind. Yeah, so if you would be a player in Saudi, if you would be a player in Qatar, if you would be a player in Oman, or in Abu Dhabi, you know that you're not going to sell more than 5, 10, 15% of your total production out of that location. The global market is a very different market. In our case, as Baystar, just to give an example, we are committed with the infrastructure applications, specifically pipe. North America has a pipe design, whereas all over the world, the certifications of pipe are much more associated with another way of doing business. So Middle East have capitalized over the years on that global demand, global footprint, and create infrastructure to push this on export basis. North America, the beauty is you have a healthy demand locally, right? Or we do have a healthy demand locally. And obviously this has been insulated for a very long time from infrastructure point of view as well. It's very difficult to import large quantity materials into North America, given the railroad system and inventories. You guys know better than I do. So you insulate a region, but at the same time, the infrastructure for export is being built up. I mean, talking about packaging, warehouses, shipping lines, capability. And if you look into costs, it's astonishing, right? So exporting out of US versus exporting out of some of these infrastructure regions is actually much more expensive today. And I do believe, again, it's a catch-up game. The next couple of years, you will see perhaps that infrastructure build-up starting to grow. Costs will go down. Perhaps we will start to make a bit more margin, and whereas other players in the industry might get their challenges as well, right? So that's more or less how do I see. Middle East is built for exports. North America was built for local and is transforming into an export hub.
Yeah. The Baystar plant that you have built here, the idea is to build slightly more specialized versions of polyethylene.
Absolutely.
For specific applications.
Yeah.
Do you, was the intent to primarily serve the domestic market?
Yes.
So how is all of that going?
So I can tell you in a nutshell the storyline, right? Again, Baystar, two original assets, they were legacy assets from Total, relatively small, relatively already specialized in North America. Let's pause this and put it apart for a second. We do have a share of exports on these assets lower the industry traditionally, yeah? When it comes to Baystar, the exciting part of the technology is Borealis only license Baystar technology for joint ventures. So it's a proprietary technology, not only from a licensing point of view, but also from a control point of view. As any other technology, obviously I'm a fan of ours, right? But as any other technology, you have advantage points in some industries and in some markets, right? And Baystar specifically pay extremely well in certain applications, including pipe. So globally, Baystar is well known and renowned to capture a relatively high market share of pipe products because of how the applications are built and the quality of the final product as such. The exciting thing is this technology was not available in North America.
Yeah.
The players in the industry know very, very well, as they are also global, right? What creates for us the capability to go relatively fast and increase our capacity in North America. Again, Baystar from one side is relatively small. We have perhaps 3-4% of production share in North America. On the other hand, we do have the backing of two very strong owners that are placing, it's not a small company in this regard, right? But this 3% market share allow us to pick and choose a little which industries we will penetrate, a little bit what you are describing as such. We will not be serving everybody for everything. We will really be very, very targeted. And the storyline is actually positive. We have been able to grow, despite the fact that the market is contracting perhaps in North America. We have been able to grow exponentially on the previous year, and the ambition this year is also very high.
Okay. Badrish, let's talk a little bit about the specialty polymers, ethylene copolymers business, right? Like, do you see a lot of competition from Chinese production there, or is, I mean, that's also super specialized technology, right? But I guess, where do you see competition from?
Again, it's a gamut when we say specialties, as Uday mentioned. There is on kind of the less specialized segments of specialty, we do see competition from China. And frankly, there is not much you can do. Today, China is not just a low cost player, as we all know. It's low cost and good quality. So on that segment within specialty, it's hard to compete, and they are competing globally. The supply chains are mature. They can supply all across the world. On the more specialty side of specialties, which is where we play, we also play on the less specialty side, but on the more specialty side, we really don't see a lot of competition coming out of China, out of Southeast Asia. It's a very oligopolistic market. There's a few companies that play in the space, some in Europe, some in the United States, of course. And these companies are, I think there's a few drivers here. One is they're able to continue enjoying those higher margins because these are high CapEx, technology protected businesses, number one. So the margins still continue. The second is there is somewhat of a sense of protecting the IP within the United States or within Europe. So I think there is that second driver at play. And then the third, of course, is the markets for some of these specialties, as Jonatas was saying. If you fit into a certain market segment and you have specialized products there, then to the extent, for example, in my business, we ended up putting capital in Europe back in 2022, right after COVID, and the investment thesis was being drafted since 2019. And you would argue saying, why would anyone put capital and steel on the ground in Europe? But we did it. We're running a very successful business there. So today we're at this point where for these very specialized segments that we operate in and product families and solutions, there is an abundance of investment that we can make, which is what we're going after globally. But the key, of course, for us is when we want to put assets on the ground in Asia, we got to be extremely cautious in terms of protecting the IP, which is where being a Korean company helps. You can put assets on the ground in Korea versus having to go put steel on the ground in China. So I think hopefully that paints a little bit of a picture of what's happening in specialty. So the very specialized end is seeing good growth, good margins. That's where all the capital is moving. And then some of the more kind of less specialized segments within specialty is where we're seeing increased competition coming from China predominantly. But it's not just China. We're also seeing the Middle East. Israel, for example, is one of the players here. And it's going to be harder to compete in those spaces.
So, but there's some of the applications or some of the key applications for some of your product lines were like in places like snack food packaging, for example, right? And what's happening from a recycling point of view, right? I mean, a lot of those are consumer brands which are under a lot of pressure from a recycling point of view. And there are some concerns, I guess, around the recyclability of some of these materials. So I guess, how are you guys approaching some of those issues?
Good question. So let's kind of get a little bit of background and then kind of come to what's happening now and what's going to happen this year and next year. So a few years back, there was this frenzy around putting assets, putting capital, making post-consumer recycled resins, as you will be familiar with. And companies, including us, were going way out into the market, signing these MOUs, memorandums of understanding, with various big brand owners. And it was almost a fear of missing out or a race to the finish line. Now, if you fast forward from this 2015, 16, 17, 18 timeframe to today, that demand has not materialized. And as Uday shared, the price of some of those recycled or green or sustainable resins was 2x the price of virgin polymers. And no one could justify on the brand owner side, if you look at the Unilevers, the Nestle's and so on, paying that kind of a premium en masse. So they kind of scaled back their sustainability targets. So today what's happening is investments into sustainability, all the way from the brand owners coming over to suppliers, is still continuing, but it is very deliberate. So if they see a certain segment, for just to take an example, may not be realistic, as you were mentioning today, snack food. If you go to the store and the younger generation wants to buy a bag of chips or nuts that looks very sustainable, and they don't mind paying $7 to $8 for this half a pound bag versus going and paying $2 for a bag of potato chips that's a Lay's or a Pringles or whatever. Those segments you can justify using recycled resins or sustainable resins. So those investments are very deliberate and still continuing. So there is that kind of a rationalization that's happened all the way from these brand owners over to the suppliers of these resins and then going all the way up to the feedstock. So there is still investment today that's going on. It's a little bit more deliberate. The previous panels talked a little bit about science-based mass balance, which we can discuss maybe from someone else. I think that is being questioned and challenged to some extent, but it's still scientific, and I think it has its role to play in terms of saying we want to use this approach, which I think was talked about in the previous panel by Elam from BP, which makes absolute sense. So I think that's just a little bit of a nutshell of what's going on. And finally, I think I'll just kind of touch upon this for a few seconds. There is also alternate technologies that companies are looking at to say, how do we take technology X and change it completely into technology Y so that it is as competitive economically, as competitive technologically, but using sustainable products. For example, if you take a bag of snack food, as you said, just as an example again, if that is made with basic polyethylene-based plastics, can you replace it with a paper bag that has a coating of a polymer that still makes it repulpable and recyclable and yet provides all those functionalities? Now, this is a stretch, but there are certain segments where this is happening. So we're seeing some of these trends coming into play where investments are more deliberate today. If there is an economic sense of using what is called PCR or post-consumer recycled resin, as well as these technology plays of switching to something else.
John, so the early markets for you are oilfield chemicals, production chemicals, and agricultural adjuvants, right? Is that fair?
That's fair, yes.
Okay. So oilfield chemicals, what's the value proposition?
Sure. Well, let me actually start by building on what you were just saying about sustainability. I think biochemicals, biosurfactants, initially there was a lot of buzz, right, because of sustainability. And I think there was a lot of disappointment, actually, because what people were doing was making offsets, using biochemistry offsets of petrochemical products. And they were more expensive and they couldn't scale. And much like the plastics, recycled plastics, frankly, people couldn't afford to use them. So just fast forwarding, I mean, what's different about what we're doing is we're actually making products that can't be made by petrochemical means and that do more than the equivalent petrochemical offsets. So the value proposition and actually the sustainability piece is an increase in productivity. So whether you're fracking, doing an acid treatment, controlling paraffin, the investment you make has a really large ROI. That ROI is more production for the same amount of effort. And so those two things, not that there's I don't really think there is a big push on sustainability in oil and gas, but that would be the sustainability message. And the ROI is obviously the benefit to the customer, the value proposition that we have. Part of the reason why that works is the treat rates are extremely low, right? So we just ran a frac program with a very large operator where we showed 20% uplift over
in the field?
In the field. So 3 wells compared to 3 wells that were untreated, we had over 6 months a constant 20% uplift. So that's a great story. Who wouldn't pay for that? I mean, the actual treatment got paid for in the first 20 days. So the other 5 months and 10 days was just profit. And so who wouldn't do that? So that's the value proposition.
And from a cost point of view, how do biosurfactants compare?
Yeah, well, the biosurfactants on a per unit basis are definitely more expensive than petrochemical surfactants. But again, you're using less, and then the benefit you're getting is significantly more. So that combination, it really is not, the ROI is there. Let's just put it that way. And we have plenty of use cases where we can demonstrate that. And the same is true in agriculture and mining. When you use it, the return on that, what turns out to be a relatively small investment, is really big.
Okay. And what does go-to-market look like? Because we've done a ton of work looking at oilfield chemicals production, chemical spaces, and it's a challenging segment, right?
For sure.
Super fragmented.
For sure.
Decision making is pushed down to the production pads, and there's quite a bit of customer education that has to be done in a higher priced but better performance product, right?
Right.
So how do you? Are you seeing some of those challenges? How are you addressing some of those?
Oh, for sure. Well, that's a big challenge when you think about, again, we're a relatively small company, so that's a big challenge for us. We're not a service company, so we're not at the wellhead. So the challenge for us, and innovation came up earlier, and you had a chart where you were talking about how ExxonMobil and Chevron were innovating in the oil field. Innovation is actually a really tough thing, and I'd argue it's innovative, but not super innovative, right? And the engineers who run the wells are not incentivized to be innovative. They're incentivized not to screw the well up, if we're honest, right? And if you look at the biggest operators, they're also very siloed. So they have a team for Wolfcamp A, and they have a team for the Bakken, and those teams are not necessarily working together. And so it is a big challenge for us to get to that level in the company where we're really promoting. But once the word gets out, I mean, the value proposition is tough. It's tough to say no.
Does the go-to-market vary, or do these go-to-market challenges, are they different for, let's say, agricultural adjuvants versus oil field?
It's very different, actually. It's not so different for mining. Mining is very similar, where those silos are really each mine. But for agriculture, that's just a totally different situation for us. So we go through distributors. There's something like 25,000 farms in the US. So to go to market in the farming, if you're going to go farmer by farmer, your sales team has to be so big you could never support it, right? So we go through distributors. We do a lot of demonstration plots. And when your neighbor, so here's one. Last year we did a tomato demonstration at a farm. He had double the production of his neighbor, and he had no rejects from, I can't remember what canning company he worked with. He had no rejects. So the neighbor's got half the bushel per acre, or tomatoes is in pounds, half the pounds per acre, and he was getting rejects. So the neighbor, I mean, they can see each other. They talk to each other all the time at the co-op level. And so the neighbor's saying, well, what did you do? And so that's how you really get good traction in that ag space. What is common across all these spaces is trust, right? You have to build trust, demonstrate performance, and build that trust.
What does your competition look like here?
Yeah, I mean, there's really two different types of competition for us. The one type, and there's not many that actually make anything similar to what we do, but we do have some competition from them. And then mindset, honestly, the mindset that it's very difficult to overcome, again, the bad experience people had with biochemicals in the past. It's hard to overcome. Again, how big is innovation? And we were talking about this at lunch, right? That, I worked for big companies. I know how it works. Big companies claim to be innovative, but they really have rules that they follow, right? So our biosurfactants, compared to a traditional surfactant, if the traditional surfactant treats at 6%, ours probably treats at 1%. How do you get the formulator to understand? They don't want to believe that. It can't possibly be true, right? And so those are the kind of things that we're trying to overcome. And we do a lot of it by demonstration, including these field demonstrations where we show how the product works.
Okay. Jonatas, the Baystar, I guess, investment was like an integrated play, right? Or ethane all the way. Like, what do the economics of that look like, at least as a comparative exercise, right, relative to, let's say, Middle Eastern economics? How is the value proposition of that kind of becoming evident now that production is up and running for you?
Yeah, no. So thanks for the question. Couple of thoughts on this, right? Without disclose Baystar numbers because we can do that. But US continues to be and will continue to be the second most profitable or economically viable region to build assets. What is challenging, obviously, here, if you would compare with other regions, is cost of capex, right? This is still very, very expensive. I was in a benchmark discussion last week, in fact, also looking at labor costs versus other regions. And interesting enough, I was not expecting that US is today one of the highest in terms of labor cost, even if you compare with Europe. So that causes, it's a paradigm shift perhaps for me, not for the ones that have been in US longer. But the value proposition of ethane to polyethylene production in US still is very, very solid and will remain solid, right? What we are seeing though is industry margins have contracted to 1/4 of what they used to be in 2024 for exports related businesses. And that's when players in Middle East with perhaps a base cost that is lower would benefit significantly versus what we are seeing.
Okay.
Now, again, it's all relative, right? If you would, I keep talking with my colleagues that are from a previous company in Europe and my colleagues within Baystar is, yes, we are going through a difficult industry time in North America, but I'm very glad to be in this region versus other regions of the world, given the current market conditions.
So
can I add something?
Sure, yeah, please.
I think one of the things, as he was alluding to, is when you put assets on the ground in the United States, your primary markets, as he was saying, are the United States and to some extent, Central and South America. Now, the pricing here is such that you can still enjoy good margins. But if you're putting assets in the United States and you want to export these products into Asia, then you're going to be stuck with what he's saying. So I think the way of looking at it is still very viable, in my opinion, to put capital here in the United States as long as you are differentiated enough that you can sell your products in the United States and to some extent in South America, versus if you want to primarily target Europe or Asia, then you're better off putting assets in the Middle East.
But if you look at some of the polyethylene production that has come on stream, let's say in the last 7-8 years, right? Some of that was oriented towards exports, right? And the idea was that ethane is going to be so cheap that you could still be able, and now things are changing a little bit, right? Polymer product prices have come down. Gas is becoming a bit more expensive, so ethane's kind of gonna get dragged. I mean, conceptually, you could argue that ethane pricing is somewhat divorced, but when gas reaches to $5, then suddenly ethane will start looking a lot more expensive, right? So, and then there's more ethylene capacity, polyethylene capacity that is coming up here. Chevron Phillips is building some more capacity with Qatar. So, like, it seems to be getting more competitive and challenging to operate in the US, at least from a consultant's point of view. I don't know how operators think of it.
Maybe I can chip in. Obviously, margins have gone very sour and I think, as you mentioned before, as close as you are to more commodity business, the margins have really went down in North America, in US specifically, but North America, Mexico, and Canada as well.
Yeah.
And this has happened in the last perhaps 12 months. So this is a market adjustment that perhaps is here to stay for a couple of years. You are right. Who has committed to investment and have already started to build will not stop.
Yeah.
You mentioned one competitor that is expected to come. On the other hand, there was another announcement by another competitor in North America that decided to pull out.
Yeah.
And if you look into the investment economics in US or in North America now for cracker/polymer, polyethylene or polypropylene, depending on how do you do, but mainly polyethylene player, the invest economics, if you believe on the next 5 years being what it is not the moment to bring a new asset to the market, right?
Yeah.
whoever is already built, again, the capex is already investment. In my case, the competitor that you have mentioned have already committed with that capex. They will continue. Indeed, what we have seen, as you mentioned, is quite a lot of exports. Again, statistics, 50% perhaps of polyethylene is being exported out of US. A lot of this is going to Asia, without looking at details. Baystar is perhaps in a better position than others, but if you would have 20% market share in production in North America right now, you need to touch some of these markets. China specifically, with this overall capacity expansion, is becoming a closed market for many of these polymers, except if you really have that level of differentiation that you were talking about, where the markets are as very advanced in terms of consumption and becoming more advanced in terms of consumption. So they are demanding this higher level quality locally, but they are not there yet in terms of production. We do export out to Asia today, still on a profitable basis, in a very small, limited quantity, again, because of that market condition. But investment economics in US are not easy anymore, right? And again, things for me coming from other regions, perhaps to give some insights, capex, challenging in the US, labor cost, manpower, challenging. And to add on this, logistics, specifically for business like us, need them to be, these two you can't really fundamentally change, right? But logistics can be resolved. And if you look at the infrastructure investments in US, it's something that perhaps needs to expand relatively fast to allow that to reduce costs as an industry.
But there's a slightly broader question, right? A lot of South Korean conglomerates almost operate like private equity firms, right? I mean, they hold assets, they hold businesses. So, I mean, this is not an SK specific question, but if you zoom out, right, like what are South Korean Asian conglomerates kind of thinking of the chemical space, broadly speaking, given where things are right now?
Great question. I think we need to delve a little bit into the history of South Korea, which will explain this. So during the Korean War, South Korea lost a big chunk of its population. So back then, this is more than 60, 70 years back. Back then, there was a thinking that we need to be able to withstand any kind of shock. So the mindset has been developed from there. And even now with the skirmishes with North Korea, the mindset is we need to build enough resilience that if a business gets decimated, we need to be able to build it from the ground up and relatively quickly. So this psychology is something that drives Korean conglomerates, be it Samsung, be it LG, be SK. SK is the second biggest company in South Korea next to Samsung. So I think this puts it into a little bit of perspective as to why these conglomerates operate like private equity companies. When they see that a certain business does not provide the returns they expect and they could invest that capital elsewhere to get better returns, there is not much of an emotional connection as to this is a business that I grew from the ground up, so I want to hold on to it. They say, let's spin it, let's take the money, let's put it elsewhere, and let's enjoy those returns. So I think this mindset of looking hard at numbers, and this is something I get challenged every day by my CEO, looking hard at numbers and taking the right decisions is something that's ingrained in many Korean businesses, coming from this culture of the post-Korean War, where they have built this resiliency of we can cut a business out, and then tomorrow if we see that we need to go back and get in there, we can go back and get in there.
So, but the numbers look really ugly for chemicals right now. So does this lead to a rethink? I mean, we're kind of seeing some of that, right, with the policies in South Korea, for example, right? But are there businesses in chemicals that look attractive today? Are there segments that look interesting?
Yes, so there is a big rethink. This is in fact coming from the government, as you would have read in the news. So there is a lot of mergers and acquisitions, going more on the base plastics. They're all naphtha based, as you know, in Asia. So there is a little bit of I think M&A that's aimed at driving costs down through better utilization of OPEX. So that is certainly happening. On the other hand, this also frees up some capital when you do this. So these companies say, what do you want to do with this? You can't just let it sit on the balance sheet. So they are trying to find areas to invest this capital. And again, a lot of these Korean companies are conglomerates. So this could be taking capital out of chemicals and putting it into AI, which we are seeing completely night and day shift, or taking capital out of very commoditized, say, benzene and paraxylene businesses and putting it more on the specialty side. So we are in the process of doing some of that, where we're freeing up some capital as a company and investing it back in chemicals, but on the specialty side, putting a plant online in China.
So John, you are well funded, well capitalized now. So we should end on a bright note. So
I love that.
What does the next year look like for Locus?
The next year for us is all about revenue growth. So we spent the last year really focusing on getting the right structure. So we restructured the company, we refocused. Again, just to reiterate, I mean, we went from a company that was any shiny thing was a good thing to chase, and we're not doing that anymore. We're very focused on our 4 markets, and in those markets, large enough opportunities. I do want to comment that the things that are going on in the commodity markets actually really help us, because a small company can be challenged to get good pricing. Sometimes
all your feedstocks are cheaper.
Our feedstocks are cheaper. Don't tell anybody. But yeah, I mean, we do.
Badrish and Jonatas are taking your calls as opposed to.
Yeah, in the past, Yeah, I mean, seriously, it's funny how that helps. I've worked for big companies and now working for a small one. I'm seeing sort of, some different ways to look at the market and the economy, and it is a help for us. The only place it's hurt is where companies have chosen to stop product lines because they just don't make any money, right? More niche product lines. But yeah, so our focus is on growth. We've got a lot of traction. We have, again, a lot more inbounds. So people are seeing what we're doing in the market and calling us, which is a really nice place to be. So we feel good about it. And I'm excited. I mean, just to end on what I think is sort of a funny story. I was out with a couple of our salespeople a few weeks ago, and we're sitting at a bar, because that's where, if you want to find your salespeople, that's where they are in the evening, right? So I went to the bar, and there they were, and they both already had a drink, and one of them says to me, "So you retired from Lubrizol. Why did you come here?" And I mean, honestly, I looked at the technology, I looked at the opportunity, and it's really exciting to me. So, and again, for a small, very specialty, as you were saying, a specialty company, there is a lot of opportunity right now.
Well, I think Locus is in good hands, John, because the last time you touched a segment that I know, DRA, it went from a couple $100 million to $1 billion market. So,
well, we could talk about that over a beer for sure. Yes, that was exciting. That was a good collaboration.
Yeah, John Uhran was one of our earliest clients. He called us, I think, in 2010, 11, when it was just me, and he said, "Hey, have you heard of DRA?" And I said, "Yeah, drag reducing agents." He said, "You're hired." So hopefully you can do the same thing for Locus. Well, let me open this up for questions. We have a few minutes here. That wasn't a bright enough ending for the chemical industry.
Okay, I have a question for John. So, say in the...
She's a petroleum engineer. This is going to be a tough one.
Okay.
But I just was curious, right? In a case where, say, there was adoption, demand, what would be the factors that would impact, say, scalability?
I'm sorry, what would be attractive?
What would be the factors that would impact
For
the
scaling,
scalability?
For us, I mean, again, as a small company, it's really not that much different from a big company, right? When you're trying to scale, and we're looking at exponential scaling, so that's a challenge, right? So a big factor for us is trying to stay in front of it without over investing, right? So that's the real trick for us. And the good news, when you're small, everybody has to do more than one job anyway, so people are sort of used to that. But when you place your capital, you have to really place it well, so that you don't build too big in one area because you're over estimating what your opportunity is and not invest in another. I would say the good news with for us is that we have a really clear path that we can stage and move when we need to. We can move quickly. So at least for the next 2 or 3 years, we're in a really good spot there. But honestly, that's the biggest challenge.
Thank you.
More questions?
Thank you, panelists. We were all awake, just so you're aware. This is it's a broad question that I have, and looking ahead in terms of sustainability as well as a minimalism culture that the future generation are adopting, right? And your space, right, seems to be a very consumer-centric demand driver. How do you see that moving forward, a shift in the generational thinking?
May I take first, or you take first?
Please go.
I think two parts of that answer, right? I think moving any industry to a more sustainable way of looking is just necessary, right? We, as industry leaders, it's a matter of pace, perhaps, other than a matter of if, right? The future need to be more sustainable. We all live in the planet. I have 2 kids. I want my kids to live in a sustainable planet, right? With that in mind, specifically in our area, there was a study by another consulting company that was done in 2022, where they looked into different applications, specifically of polymers. And out of a list of, if I remember well, 14 applications that goes from pipe, packaging, and so on and so forth, there was a comparison with plastics versus its best alternative. And the reality is, people do not like to talk too much about it because of the whole discussions around sustainability. Out of the 11, 10, or out of 14, 13, I don't remember exactly, 1 only was not attributed to plastic. So if we really want a sustainable future, we need to deal with the plastic waste problem, not necessarily with the change in plastic. So that's topic number 1 around sustainability. We are very proud, actually, as Baystar, as I mentioned, we are investing more and more into allowing infrastructure applications. All the different regions I have been needs further and further investment in infrastructure. Some cities lose 30–40% of their water production due to pipes that are old and they are losing water. So that's the sustainability story I think we all need to be talking about as an industry. Now, when you come to generation, as you mentioned, right, I think it's also fair to say if you compare regions and plastic consumption per region, US is by far the highest consumption per capita globally. If you even compare with another region like Europe, if I remember well, it's something like 40 kilos per person versus something like 26 kilos per person, just to put perspective. India is less than 1/10 of that, and then you multiply by population. So I do see the paradigm shift that you are saying. I think more and more we will be to more sustainable, reusable solutions. Europe is leading this transformation. It will go globally. At the same time, the reality is these solutions are more sustainable in nature, and we will see demand grow in some regions, perhaps demand contraction in other regions as a consequence of that.
Can I just quickly add?
Yeah, sure, please.
So I think it's a good question. As Jonatas was saying, the per capita consumption in the United States is not declining. So there is, of course, a consumer-focused market, but they still need to consume what they consume. But there is also other applications. There's construction, there's automotive, and all of this keeps the per capita consumption steady within the developed world. So when you look at United States and Europe. Now, as he was saying, the per capita consumption in the developing economies across some of the countries in South America and Asia specifically, that is skyrocketing. So I think overall, drivers for the market, when you take a long enough time span, which is generational, 15, 20, 30 years, are fundamentally very strong when it comes to this industry, when it comes to polymers. Across these different markets, from automotive to construction, compounding, and food and beverage packaging, of course, also with these dynamics around what's happening in the lower per capita consumption geographies of the world, the developing countries versus the developed countries. So I don't think there is going to be a kind of doomsday scenario for the foreseeable future. It's more, I think, a question of, can we survive the next few years where there's been overcapacity across the different polyolefin spaces, low density, linear lows, high densities, as Jonatas is familiar. Can we kind of sustain that through the next 4 to 5 years through 2030? And this is a cyclical market, and demand is going to catch up, and then you'll get into the zone again of elevated margins, barring no outside factor, geopolitical, or some kind of a supply outage like we saw the winter freeze in Texas in 2021.
I feel like sustainability from a consumer point of view is super personal, right? Everybody has their own opinion of what it is, and also how they don't want it to affect them. So, I mean, you talk about plastics consumption in the U.S., and I have a lot of friends who said, "Oh, we have to use less," but they're not actually doing anything about it because it's convenient or whatever, right? And I think the chemical industry has been its own worst enemy at times because, as you guys have pointed out, I mean, we've done a lot over the last 10 years to be more sustainable, and at the same time to survive as companies, right? And so somehow that's the message I think that needs to get out to the consumer, to understand that there's a lot going on, and that companies are trying hard. Okay, maybe not every company is trying hard, but I think the gross majority realize we need to your point, we need to worry about the future, and so chemical companies are doing something about it. I'd say the same with oil and gas, right? We want them to stop drilling, but there's no less demand. So what are they supposed to do, right? So that's so that in that way, I think we need to just do a better job of communicating the positive things that the industry is doing.
That's a pretty optimistic tone, and I think you can sell each of them an LDPE hypercompressor. I wasn't expecting that. But well, we'll wrap up here. I want to thank our sponsors again. Truly super grateful to them, and Horbiger, Ineo, Waukesha, and Everlands. They keep coming back every year and supporting us at the ADI Forum. Really can't do without this. I want to thank everybody who has stuck around, everybody who joined us today. I want to thank the panelists.
Thank you.
And if you like this, join us again. Same date apparently next year. So thank you again.
Thank you.
Very good.
Okay, thank you.
Thank you.